All right, everybody, welcome back. In this video, we're going to discuss a trade that is on right now. This is a 0-day iron condor in the SPX. All right, so show you what the trade looks like. These are the 4 legs of the trade. Just to be able to zoom in, I know that we can see it in the video. Boy, we can see that, right? All right, so there's 2 calls, there's 2 puts. I have a call credit spread, and then I have a put credit spread. We call this a $10 wide iron condor because the strikes are $10 wide, right? Between 42.80 and 42.70 is $10. And between 43.55 and 43.65 is $10. In an iron condor, you cannot lose both sides. You can only lose one side or you can win. That's pretty handy if it needs to be managed later on. Now, although there are 4 legs in the trade, we really only want to manage this as an individual thing. We don't want to try breaking it up and splitting it up and doing all that kind of stuff. It was a delta neutral iron condor. I built it when price was pretty close to the middle. It wasn't perfectly delta neutral, but it was pretty close. Let's look at the timestamp so that I can fill you in a little bit on when the trade was taken. 12:50 in the morning. And I say 12:50 because this is my time zone and we need to look at market time zone, right? So I live in Kansas, that's Central Time. I need to go forward an hour. Instead of 11:50, we need 12:50. So we'll use the line here. We'll go to 12:50 this morning or this afternoon. That was where I got into the market, okay? And when I got in right there, there's the top of the iron condor and there's the bottom of the iron condor. And you can see I was pretty close to being in the middle. The funny thing is, since I've gotten in it, price ran at me and then fell away from me. And we're basically right back where we started. That would make you think that the price is the same price as when I got into it. And yet it's not. And the reason that it's not is because an iron condor really is a time-based trade and time has gone by since I got in it. So it's cheaper and price really hasn't gone anywhere. By the way, that's what we want, right? We want price to not go anywhere. So how is this trade going to be profitable? Well, if price stays between these iron break-even lines, then I will be profitable, okay? I sold to open for $2.30. So the most that I can get is $2.30. This is a higher risk trade than I normally would take. And by risk, I mean dollar amount of money at risk. It has a high win rate as a strategy. It's just this trade is risking, I'll use round numbers. It's risking $750 to make $250. That's not necessarily a very good risk to reward, but it has a high probability to it. One thing that you'll notice is from my entry, it was a 1% move to the upside, pretty close, and a 1% move to the downside, pretty close, not perfect, right? But pretty close when we're down 1% on the day. So we're basically saying we think that the S&P could rally back up all the way to a 1% move, or it could fall down with a 1% move from its current location. And if it could get past all of that, then I would start to begin losing. But what would it take from this current point in time? What would it have taken for me to be in a losing trade? Now, remember, this trade is still active, so technically I can still lose. From our current location, when I got into the trade, that's where price was at the time. We would need price to get inside the 5-minute open range, break through the top of the 5-minute open range, which also happened to be the high of the day, and then come up and get through the bottom of yesterday's range and then hit me. Okay, so I'm not going to say that it couldn't do that, but it would really take an act of news or some other galvanizing push within the market to see that kind of structural shakeup. To the downside, it would have to break this pivot point, which is the same pivot point as back here, basically, and then break the low of today and then hit me. And again, it could do that, but we've been pretty sideways. It's a slow, sleepy Friday. There's nothing going on except news. We have no economic events left on the day. And with the fear and uncertainty in the market, we're not really seeing a lot of flow in the other sectors and in the other names. Traders just really aren't looking to hold on to anything into the close, into the weekend. So while we have been kind of rallying up and fading off and rallying up and fading off, we really just aren't going too far, too fast. And that's kind of the perfect time to put on an iron condor. Normally, I would just pick one side, or I would start by picking one side and then adding the other side. But this account now is no longer above PDT. So I have to be very particular about the trades that I take and how they're going to be managed if they go wrong. If this was above PDT, I would have so many more choices on how to manage the trade and not be as threatened when it comes to a losing trade. But now that it's below PDT, I have to worry a lot about the loss and how it's going to be managed. And at this point, the only thing I can really do is just close it, recognizing that it's beginning to lose and just pull the ripcord and get out. Which means I'm going to end up getting scratched in some way and taking some sort of a loss. But if you're above PDT and you have days to burn, then you could roll the side that's not being tested. So for an example, if price was to begin falling towards our puts, you could roll those calls closer. You would leave the puts there, you would let them lose, but you would collect a lot more credit in those calls so that you could offset those losses. Right. And that would be a really great way to manage this trade. It's what I would do if I could, right? That would be my go-to on how to manage the trade. So we are watching time go by, and I did get more than one lot. And that just means that I have more than one iron condor on. You can see I have 7 of them. So when I sold for 230, I got 230 in credit times 7, right? So if I was to close everything right now, I'm looking at around $315 of profit. If I can hold this longer and let more time go by, then I'm very likely to see more money because I'll be able to close it by buying it back cheaper. I'm going to take a picture of this area so you can see what it is that I'm looking at, and we can understand the language that I'm using a little bit more, right? So right there. So my average trade price, that's what I got when I opened the trade. That's $230 of credit. That's my average price. If I wanted to close it right now, the mark or the mid price of this iron condor is 190. So I sold it for 230. If I wanted to buy it back right this moment, then it would cost me 190, and that would be a profit of 280. It's not what I want. I'm going to hang on a little longer, see if I can buy it back cheaper than 190. And if I can, then I'll make more money on the P&L, right? I have 7 of them. So I'm going to begin fading out somewhere around 25%. I'm looking to close at least 2 of these at 25%. And then I'm going to aim more for the 50% mark and probably hold 1 or 2 into the 80s. All right, guys, just a nice recap video, short and sweet. I appreciate your time, and I'll look to see you at the next video.